Oh, snap! Nvidia up 4% here upon reporting their earnings. Guys, we knew this was coming. We knew this was going to happen. Now, what did Nvidia just say? What do the numbers look like? We'll get into that in just one moment. Jensen Huang told us this 5-6. The AI trade is alive and well. In fact, never better. Does this mean that, markets can start to recover from here? Well, potentially. But the next 24 hours are also critical, and we'll explain that in today's episode as well. But first and foremost, let's get into Nvidia and what they just said. So Nvidia's Q3 revenue came in at $57.01 billion. The estimate was $55.19 billion. Nvidia sees Q4 revenue $63.70 billion to $66.30 billion. The estimate was $61.98 billion. So they guided up about $2 billion on the low side and about $5 billion or so on the higher side. So that's more of a typical Nvidia beat and raise, right? They beat by $2 billion, they raised by $2 to $5 billion. That's much better than most people were expecting. Now, here you can see Nvidia's Q3 adjusted EPS was $1.30. Q3 adjusted gross margin 73.6%. I believe that beat estimates as well. Q3 data center revenue at $51.2 billion, and Nvidia sees again Q4 revenue $63.7 billion to $66.3 billion. The estimate was $61.98 billion, and last year's number was $49.34 billion. So some pretty impressive year-over-year growth figures. Now, Nvidia's Jensen Huang says, quote, Blackwell sales are off the charts. Nvidia's Jensen Huang says cloud GPUs are sold out. So in the markets recently, there's been a lot of fears and concerns about an AI bubble and about AI slowing down and blah, 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 blah. But Nvidia is the king of AI. And typically what Nvidia says kind of guides the market's expectations for where AI is at. And it's no surprise that Nvidia had good earnings and Jensen Huang has great things to say about AI. He said this 5 or 6 weeks ago. It's no shocker at all to us. Now, Nvidia says Blackwell Ultra is now our leading architecture. They say Nvidia H200 sales insignificant in Q3, which is wild. They say Nvidia gaming revenue is up on a continued demand for Blackwell. So that's interesting. But really, this just reinforces the AI trade, right? This just shows that AI is alive and well, that AI is continuing to boom. The markets, as I've talked about, need to be cradled like a baby sometimes, and they've been in this needed to be cradled like a baby phase for a while. And Jensen Huang, the rock star he is on earnings, is literally cradling markets, saying, okay, it's all fine, don't worry, AI is alive and well, okay? While we've been dealing with freaking gunfire for weeks now, Jensen Huang just calm that down a little bit. Wave the white flag, if you will. It says, nope, AI is doing just fine. Now, obviously, we're going to get more details on this in the conference call and more specifics on this. But I can imagine, there's going to be even more positive things said on the actual conference call from Nvidia. Now, this has been a big catalyst for a long time. This market has really been two-part, okay? One part has been recession concerns and growth fears and, small caps selling off. The other part of this has been the AI scare, the AI bubble fears, the, investment is going to slow down kind of fears. And, well, we're going to be getting some economic data tomorrow. We're going to get into that in just a moment. and that's going to be really important to reinforce the economy. But Nvidia earnings reinforces the AI trade. And I believe over the next 24 to 48 hours, the economic, lack of a catastrophe really reinforces this market from this point after going through largely what has been a correction, okay? Even in the indexes, but on a single stock basis, you've been in a correction. And I think Nvidia earnings really helps us leave this correction and get AI stocks back where they should be. And that is moving to the upside. Now, you can see your indexes like the NASDAQ up 0.4% following Nvidia earnings. Even the small caps are up 0.2%. The SPY right now is up 0.24% here in after hours. And this is exactly what this market needed. I mean, it was really hanging on Nvidia. If Nvidia, wet the bed and had bad things to say, then this market would have gotten a lot worse. But Nvidia is really a stabilizing force for this market. And I do also think this brings to life a lot of the AI stocks that have fallen pretty dramatically in the last couple of weeks. Put Meta in that category. Put Oracle in that category. Put Tesla in that category. Put these small cap AI stocks that we are investing in, linked down below in the description of this video for the trading community, in that category. Okay? Those stocks, I believe, can start to come back to life with the kind of AI investment that we are seeing in AI. I mean, it's pretty incredible how scared markets got for literally no reason. And now Wall Street's going to say, wow, we were scared for literally no reason. And likely you're going to see a lot of buying in these areas. Now, again, we do have some earnings from Walmart tomorrow. We do have economic data, a ton of it coming out tomorrow. So, the coast is not clear, but getting these earnings from Nvidia really de-risks the markets. Why? Because, markets can handle bad news really well, but we can't handle uncertainty very well at all. And just not having Nvidia earnings has been uncertainty for the AI trade, right? Not having economic data has been uncertainty for the economy and where this economy is at, okay? Now that we're starting to get some of this information, the uncertainty is falling and will continue to fall over the next 24 hours, as we'll talk about in just a moment. And then we can, get back to looking at this market from a fundamental perspective, not just a sell first, ask questions later kind of perspective. And that's, where I think we're getting back to. Now, obviously, Nvidia earnings, that's the most pressing thing of the day today, okay? That is really the biggest catalyst of this week. But we did have new information today that markets responded to. Rate cut odds fell. We did get some economic data as well. I will share that with you and what to look forward to tomorrow right now. Okay, so first and foremost, markets responded to this morning. TJ Maxx and Marshall's owner hikes outlook as the CEO says holiday season is off to a strong start. This sounds really good. This pushes back on the whole recession narrative, okay? This is something that is seen as positive. Now, we've been in a government shutdown, or we were in a government shutdown, I should say, for 41 days, 40 days, something like that. And there was a lot of uncertainty around the economy. Now, TJ Maxx and Marshalls are seen as, discounted retailers, okay? They're still kind of, they're up there. It's not like you're going to Goodwill or anything, but seen as a bargain shopping retailers. And this kind of language, although it is a bargain shopping retailer, is seen as positive. And it does lower the perceived fear around the economy. And Fed funds futures markets did respond at least a little bit to this. Okay. Now, as of right now, The odds of a rate cut sit at 26.4% for December 10th. That is down from 42.4% yesterday. So the odds are down like 50% just today alone that we're going to get a December 10th rate cut. Part of that has to do with the strong retailer earnings today, but the other part of this has to do with the BLS that says, yep, you're not going to get the October jobs report, okay, until December 16th. The BLS says the full October jobs data won't be released. Available figures to be included in the next report. The BLS said October payroll data will be released alongside with a full report for November. An unemployment rate for October will not be included in those figures because the data could not be collected, the BLS said, citing the shutdown. What's interesting about this is it's not really new information. We already knew that we weren't going to get the jobs report. Caroline Levitt said, we may never get the October jobs report or the October CPI report. But it does look like we will get some of this data. It says instead the agency said October payroll data will be released along with a full report for November. But we just won't get that unemployment rate. So you're going to skip October and then we'll get November's data in December, which honestly is not too far from now. The agency also pushed back its November jobs data release to December 16th from December 5th. So we were expecting to get the November jobs report December 5th. Now we're not going to get that until December 16th. So that is what is also lowering the odds of a Fed rate cut because we're not going to have as much information. Okay? We were expecting to get the November jobs report before the December 10th Fed meeting. Now we're not going to get that until 6 days later. So that is lowering the odds of a rate cut today. But most of your major banks like JP Morgan are still calling for a December 10th rate cut, which is interesting. Now we're going to be getting some economic data tomorrow. I believe it's like personal spending and retail sales data that we will be getting tomorrow. So we're definitely going to be on the lookout for that. We're also going to get Walmart earnings tomorrow morning. Walmart earnings, that's like the biggest set of economic data there is. Walmart is going to be able to tell us how the consumer is doing definitively. Okay, they're going to be able to tell us, are things getting worse? Are they getting better? Odds of a recession, are they going up? Are they going down? How is the holiday shopping season? TJ Maxx and Marshalls say things are off to a good start. But does Walmart say that? If Walmart says that, that's great. Like, we're golden at that point. But again, we still have like 24 hours, 12 hours until we get that data. So, yeah, it hasn't happened yet. We did get the Fed minutes today that show a divide over October rate cut and cast doubt about December. Now, the FOMC minutes is a basically like transcript of the last Fed meeting. So it's not new information. It's essentially what the Fed talked about at the last Fed meeting. It says here, disagreements stretched into the outlook for December, with officials expressing skepticism about the need for an additional rate cut that markets have been widely anticipating, with many saying that no more cuts are needed, at least in 2025. So this is why Powell came out and said December is not a foregone conclusion, because there were quite a few, says here, several participants addressed that a further lowering of the target range for the federal funds rate could well be appropriate in December if the economy evolved about as they expected over the coming inter-meeting period. And it says here that many participants suggested that under their economic outlooks, it would likely be appropriate to keep the target range unchanged for the rest of the year. So, not great. Now, again, tomorrow we're going to be getting that, I believe it's, again, personal spending rates on retail sales. It doesn't actually show up on the economic calendar here, but we should be getting initial jobless claims for October 25th as well. You're expecting around 257,000 claims. The last week's number was 232,000 claims. So if that comes in lower than 257,000, that's going to be seen as positive. But tomorrow, we're also going to be getting the September non-farm payrolls report. The expectation is 50,000 job ads. Here's the deal. If it's like 30,000, that's good. That's probably the best possible outcome, is like 20 to 30,000. Before the government shutdown, we were running at about 30,000, okay, for the last 3 months before the government shutdown. So that would be like kind of in line with the trend we had before the government shutdown, where the Fed was cutting rates. Not recessionary kind of jobs reports, but not suggesting the Fed should be pausing either. If we get anything 50,000 or higher, it's not going to support a cut in December, and that could put a little bit of pressure on markets. We're also going to get the September unemployment rate as well, expecting that to hold at about 4.3%. Now, we are also going to be getting existing home sales tomorrow morning for October, expecting about 4.1 million. Last month was 4.06 million, so a little bit of an increase there. Kansas Fed Composite Index, Kansas Fed Manufacturing Index. We're also going to be getting the Philly Fed Manufacturing Index participation rate for September. And I believe a couple of Fed speakers, if I'm not mistaken. Fed Hammock will speak, Fed Cook will speak, and Fed Goolsbee will speak throughout the trading day tomorrow as well. Looks like we should be getting the CB leading index month over month for September as well as October tomorrow. So a bunch of economic data. Nvidia earnings today, Walmart earnings tomorrow morning. And I think, by tomorrow, you're going to have a lot more clarity on the economy. We now have a lot more clarity around AI and around, GPU demand from Nvidia. But we're going to have a lot more clarity on the economy. And now we're getting, again, more clarity on the AI trade. And I think this does set us up for a very strong Thursday tomorrow and a very strong Friday. And what is possibly going to be a very strong next week as well, because I think inevitably the odds are going to align more towards 50-50 for a rate cut, right? You're already no longer pricing in a rate cut for December. I think the odds could actually go up over the next 2 days for a rate cut, because I don't think the jobs report is going to be so strong it says the Fed shouldn't be cutting rates, but I don't think it's going to be so weak that it shows we were in a recession in September. Okay, keep in mind the jobs report we're going to be getting tomorrow is for September. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.